traders, Gary Wagner with WFGForex.com, your daily market update for Forex Gold. It is Wednesday, the 14th day of July, and this is the Daily Report. Forex Gold is currently trading at 1208.26. In terms of the range, we have had a low of 1201.80 and a high of 1219.20. So we have had a $20 range on the day. The interesting thing that I'm finding in terms of the candlestick pattern that we're looking at, the candlestick itself, it is forming what is known as a doji. Of course, a doji is a candle in which you have an open and close that are very, very similar or the same. And in this case, we do have a $20 range. Because of the Forex, the market always has to open at the close, and so it would be in an evening star position or an inside trading day in a typical market that had an open and closing time zone. So what are we looking at today? Well, I've got an interesting scenario in terms of what I'm looking at, what I think we're witnessing in terms of this corrective phase. So traders, what I've done is I've put up our Elliott wave count back from the beginning. Of course, our fifth wave, which was at our record top at 1221. This is back in December 2009. That began our corrective phase, our A, our B, and our C waves. That started our impulse phase. Our impulse phase is always going to take us with a total of 5 waves. The first 3, 1, 3, and 5 are going to be our impulse waves, and our corrective waves, of course, are always going to be 2 and 4. The other thing you notice, I've drawn 1 in yellow. This is going to be really our benchmark because we take wave 1, our calculation for wave 3 was 1.61, which actually took us within $2 of the actual top, our projection, and wave 5 is supposed to equal wave 1, and they were both basically $100 moves. Now comes the $64,000 question. I absolutely believe we are in a corrective phase. To be in a corrective phase, of course, we're going to have our A. We're going to follow that with a impulse wave, which is going to be our B wave. And I'm projecting that to take us about to 1221. 1224. And then, as I said, if it's going to be a flat correction, it should come down, test this one area one more time, which is 1187, and then we would go back into our impulse phase, something like this. The other scenario that is possible is going to be what's called a classic zigzag pattern, in which what would happen is the market would come down, would form its base. This would still be our A, our B. However, our C would probably take us down to around 1164 to 1167. In other words, a total retracement of this wave 5. Now, the interesting thing that I'm looking at today is that we do have that doji. And that doji is typical of a market in consolidation, and one in which you have a point in time where the market can genuinely break out one way or the other. And for that reason, I've kind of put up some trend lines to show that we are forming that triangle or wedge formation in which we have gotten this consolidation. We've been talking about this choppy market for a couple of days now, in which we've had an alternation of higher closes and lower closes, meaning black and red candles throughout the day. And you've noticed that this range, although it has been moving to the upside, has been trading in a very, very tight, I'm going to go from the bodies, not from the wicks, but a very, very tight trading range between around 1197 and call it 1210 to 1212. So typically, what will we see when the market forms this kind of a base here? Well, let's take a look in history and see what we've seen prior to that. If you notice that the moves that we've seen in these waves had very, very little consolidation. We had one band right in here, and that was the top of that C wave. we had another big band right in here, which was the end of that fifth wave. You notice we have a very, very tight range that developed with all these dojis, and that was right before we saw that major break to the downside. So it does seem plausible to me, that without the lack of any fresh fundamental news, we could be forming our base here, and our top might not be 1221, but might only go to this area in here, and then what we might in fact see is another leg down, something like this. If that's the case, this will be a very, very short corrective period before we go back into our impulse phase. So traders, what am I looking at? Well, my belief right now is that as we move into this corrective phase, which we absolutely can title this our A wave. Are we in our B wave yet? Well, that's a little bit early to tell because we could form this consolidation and simply get a move like this. If we do, this is going to be a two-part or a subwave within this wave right in here, and we'll still be in our A wave consolidation. The second scenario that is plausible as far as I'm concerned is if we get this market to move up, let's say to about 1221, then I believe that we will have had our completion of our A wave. This is our B wave, and then we will determine whether we're going to get what's called a flat correction, which would take us to here, or a zigzag correction, which would take us, I would think, at least to an equal low right around 1167. In other words, matching this low right in here. So that plausible scenarios, I think we're right now in mid-range. So I think that the action should be to remain flat in the market. We would have a good opportunity right in here to sell short. In other words, selling the rallies. And I think that we're going to have a superlative opportunity coming up once this corrective phase completes itself to begin to accumulate on the long side. Because my belief is once we go back to that impulse phase, we will, over these 5 waves, take ourselves not only to the 1260 area, but I think that we will effectively take that out and head towards $1,300. We simply need to weather this corrective phase out. As I said, fundamentally, my belief is that the long-term issues and fundamentals that are driving this market have not changed. This has been Gary Wagner with WFGForex.com, wishing you, as always, good trading. We will talk to you tomorrow. Bye-bye.